Hey, if you're an options trader and you're having difficulty making profitable trades on a consistent basis, it's probably one major reason for that. And that's because you're not following the trends of the stocks that you're actually trading the options on. If you want to be a successful options trader, you have to know how the stock is moving. You can't just trade options on a stock and not have any idea what that stock is doing. You got to look at the stock charts and you have to see which way the stock is moving. And as long as you play with that trend or stay out of the trade, if the trend's not going in your favor, you're going to see your profitability increase. So you have to learn how to read the charts. So in this video, we're going to go over the charts. I'm going to show you what I do, what I see, indicators that I use on my charts, and then we'll figure out where to go from there. So if you want to figure out how to be a better trader and use the charts, you're going to want to stick around and watch this video. So let's go. All right, everyone, Lee Lowell here from smartoptionseller.com. And today we're going to be looking at the stock charts. This is the way that I do it and the way that I've been doing it for the last 30 years. If you're trading options, you need to know which way the stock is moving or not moving, and that will help you figure out which kind of trades you should take. All right, so we're just going to jump right in and we're going to start looking at the charts. What we do here is we always want to start looking at the indexes first, and we always look at the S&P 500 because that's the best gauge of the market as a whole overall. So we look at the SPY, okay, which is the exchange traded fund for the S&P 500. Very, very, very liquid, very popular instrument that you can trade. So we look at that. So, but before we go on with that, I just want to show you what I use on my charts here. Okay, so up in this area here is the chart itself of the instrument, and it's a daily bar chart. I use the open, high, low, close bars. I don't use candlesticks. Each one of these lines is 1 day's worth of trading. We look at the daily charts for the most part. And then when we want to dial into actually making the trade, then I'll dial down to maybe the 1 minute chart and see where the stock's going at that time. But so up here we have the daily charts, and I have 3 moving averages that I use. Very popular moving averages. We got a 20-day, a 50-day, and 200-day moving averages, all simple, not exponential, but simple. So we have a 200 moving average right here, 200-day moving average right here. The blue line up here is the 20-day, and then we have this red line, which is the 50-day moving average. Okay, a lot of people follow these same moving averages, and that will typically tend to have things move, because if everyone's following the same thing, everyone's thinking's the same thing. So a lot of times it's a self-fulfilling prophecy where the charts will move the way that a lot of people are anticipating it to move because they're all looking at the same setups. Okay. And the moving averages just give you an idea of which way the stock or index is trending. Now down here is the only other indicator I use, which is the RSI indicator. It's got a 14-day look back period, and it's an oversold, overbought indicator. And it fluctuates, and I have the level set at 80 and 20. Okay, you can move those. The default is 75 and 25. I've widened it out, so I really want to know when a stock is getting overbought or oversold. So typically, it'll oscillate between the 80 and 20 level, and when it gets up near 80, that means the stock's getting a little overheated. Doesn't mean a turn is coming right then and there. It just means that the stock's getting a little overbought. And when it gets down to the 20 level, that means the stock's getting oversold, and a turn higher may be happening soon. Okay. And then the only other things we look at are support and resistance, chart patterns. We want to see where the trend is going. So we draw these lines here. Okay, these blue lines here, these darker blue lines where it looks like a channel, is something that we manually draw, and you can do that on your own charting platform. It just gives you a nice visual of which way the market is heading. So you can see early in 2022 when the market started to fall, it fluctuated in this channel. Okay, so you can draw your support and resistance levels. You take a line and you draw along the tops and you draw along the bottoms of the chart action, and that gives you the range that a stock or index can fluctuate in. And if it's staying within the channel, you can use the areas up here to get short, you can use the areas down here to get long, and you just play within that range until something comes along and starts pushing it in a different direction. Obviously, around October of 2022, the market and a lot of stocks, individual stocks, started to turn around and move higher. So you can see now the S&P 500 has been in this uptrend. And we can remove these lines just as easily as we put them on. Okay, these are not lines that come automatically on the chart. You have to use them yourself. You have to do them yourselves. So I just want to take some of these lines off just to let you know that these are things that we manually do. So you can obviously see this the stock market itself has been in this uptrend since the end of October. And if we want to draw more lines, we can always draw more lines. We can start from the bottom here, and now we've got this longer term uptrend happening. So you just want to get a visual of what or how the stock or market is trending. So now the S&P 500 is in this trend. And they also want to look for various patterns that, we've got bull flags, we've got congestion patterns, we've got triple tops, triple bottoms, W patterns, M patterns, all these different things that you can learn over time. For those of you just getting started with technical analysis, this is all called technical analysis, chart reading. And you want to be, adept at this before you really start trading options. So I've got two easy books that I want to show everybody. Right here, we got our first one, 7 Chart Patterns That Consistently Make Money by Ed Downs. And the other book here is Charting Made Easy by John Murphy. Now, I have links for both of these in the description below. Okay, so if you read in the description of the video, you'll see those two books listed. So if you want to, take a look at them, click on the links down there, and you can find them. All right, so let's start taking a look to see what the market is doing. Obviously, the market as a whole is in an uptrend, and it's been oscillating, in this range. So what you typically want to do if you're going to be trading options, if you want to get bullish, your best goal is to try to wait for the next turnaround, okay, for the market to start moving higher. You want to have more high probability trades. You want to get the market as it's starting to either go up, or if you want to get bearish, you wait for the market as it's starting to turn down. So if you were thinking bearish up here, you would probably want to get into a trade, a day or two after it starts to move down, so you can get along with the trend. Now, if you're thinking bullish, you may want to wait till you start to see the market start to move higher again. You want to get on board as the market's starting to make that move in whatever direction you're thinking, okay? So the SPY, the S&P 500, now we know seasonal patterns, August and September, are usually more bearish than not for the market. So we're sort of in these, these last days of summer here. Trading in the summer is always tough. It's volatile. There's not a lot of volume. And August and September can be more bearish than not. So you want to just kind of, maybe play lighter during this time, because you don't want to get caught in the chop. All right. So let's look at the triple Qs, which is the exchange traded fund for the NASDAQ. And we want to see what's happening here. Same thing. The triple Qs are also in this uptrend, bouncing right off the bottom edge of the channel here. So this could be, a turning point. If the market could bounce here, this could be your timing pattern for getting into a bullish trade. What type of bullish trades? Well, you can either buy the stock, you can sell put options, you can sell put credit spreads, you can buy calls, buy call spreads, all these different ways of playing a bullishly directional assessment. So what I would do is that if I'm playing the NASDAQ here, I would want to see the market start to move higher and get that next trend upwards before really diving into a bullish position. Use the patterns that you see on the charts to give you a heads up to which way the market may be headed. So these are what we call higher probability setups. You know that it's bouncing, should bounce based on where it's been trading for the last 7-8 months or so. It's been contained in this channel here. So more likely than not, the market will bounce and turn higher. If it doesn't, it will fall through. So you want to make sure you don't jump the gun too often, because if you buy now, the market could fall through here and then you'll be holding a losing trade. It's better to wait a couple days. You may miss the bottom of the move, but at least you'll be getting into a trade that has a higher probability of continuing on. Okay, so that's what you want to do there. Let's look at the Dow Jones. We use the DIA. This is the diamonds, they call it. This is the exchange traded fund for the Dow Jones Industrial. You can see we had this, resistance here for a long period of time since last summer, since summer 22. It just couldn't get through. And then recently, in the middle of July, it blasted through the resistance, but it has now come back down. You can see based on this trend line here that the market kind of fell through it for a day or two, but has since bounced back up. So this is where the market finished on Friday, August 25th. You can see the little dash mark on the right side of this bar is above this previous resistance line, which now should act as support. So the Dow is sort of at an inflection point here. It's right at the corner of the resistance and the uptrend here. So we want to see what's going to happen next week. If the market starts to move higher, then you have your higher probability set up for a bullish trade. If it falls through, then we have the 200-day moving average here waiting to try to catch it for the next line of support. So more likely than not, we've got the Dow, the NASDAQ, and even the S&P 500, sort of at an area where we want to see the market turn higher. Okay, so that's what's happening in the indexes. Let's start to look at some individual stocks here and see what's happening. We typically look at the more popular high volume stocks because that's what a lot of people concentrate on. That's what a lot of people like to trade. So we look at some of those. Let's start with our biggies. Let's look at Apple. Okay, and if you've been following my videos for a while, you know that Apple was in this. You can see the W pattern here. Okay, I drew all these channels here. The W pattern is typically more bullish, and Apple had this long-term resistance right around $180 a share that it finally broke through its, in early June, went up and now has come back down. But you can see right here where we finished the market yesterday is right near that. It's just under that 180 level. So we want to see if the market could keep Apple up here, get it back above that 180 level, or if it's going to keep falling. We have the 200-day moving average here waiting below for the next line of support. So once again, Apple's also at an inflection point, and it's going to depend on how the general market moves starting next week. Now, most companies, they have earnings announcements every 3 months. So in between those 3 months, there's really not a lot of market making news that's going to move a stock higher or lower. It's going to depend on how the indexes move. So Apple also at an inflection point, just below that 180 prior area of resistance. So we want to see which way that's going to move. Let's look at Amazon. Amazon also was in this nice uptrend, still is in that uptrend here. Okay, so it's sort of come back in the middle, but you can see as some of the moving averages they act as magnets. Here's the 50-day moving average right here, and you can see Amazon is just holding support right at that 50-day moving average. Had to blast up, that was the earnings, and has come back down. That's what some people called the post-earnings announcement drip, where they have a good earnings announcement, it gaps higher, and then it slowly drifts back down to an area of support, which is the 50-day moving average here. So if Amazon could start to tick higher next week, that's your higher probability setup for getting into a bullish trade. So you want to keep an eye on that. Let's look at Tesla. Everyone loves Tesla for the most part. It's such a bullishly oriented stock. But as I've said in the past, it's really hard to draw some good chart patterns on Tesla because it is pretty erratic. Right now, I had drawn this support line here. Obviously, it fell through it. Didn't fall down to the 200-day moving average. So Tesla's always sort of just in this jumbled mess. but there's a lot of bulls out there. So I can't really make a quick call here on Tesla because it doesn't conform to any of the chart patterns or things that I look at. So, take it as you will. Tesla is fighting to find support here. And, a lot of people are hoping it's going to move higher, but I really don't have any major outlooks on Tesla itself. Let's look at Nvidia, because Nvidia is just such a monster of a stock. It plays in the, the computer chip sector, also in the AI space, artificial intelligence. Nvidia is up over 200% this year. Back in October of 2022, it was in the low 100s, and now it's just tagged up over 500 just this week. So it's just been a monster, and it keeps making these gaps into these new uptrends here, these new uptrending channels. So it's sort of in this channel here. It had the nice gap higher on earnings, has pulled back. So Nvidia, it's a strong stock. The earnings back it up. So will it continue to make new highs? Probably. Had a pullback here. You've got the 20-day moving average here. You've got this 50-day moving average here. And way down here is the 200-day moving average. I don't think it'll ever fall that far. But it's still sort of contained in this uptrend. Nvidia is in an uptrend. So, it's a very expensive stock. So please play accordingly. But most likely, if it bounces off this lower edge of the channel, it will continue to move higher. Let's look at Adobe. A lot of these big NASDAQ stocks, big expensive stocks. I like Adobe's pattern here. It keeps moving higher, and it keeps finding support on the moving averages. Right now, it's holding support right at the 50-day moving average. That happens a lot. You'll see these things. If you look at thousands and thousands of charts, you'll see the same setups occur. So I like in Adobe here, it's holding right on the 50-day moving average. If it starts to bounce again, it's probably going to break new highs or recent new highs above 550 in the near future. People are bullish on Adobe as well. So it's got a nice uptrending bounce off the 50-day moving average here. I would be more bullish than not on Adobe. Take it as you will, but Adobe looks pretty good. What other stocks do we want to look at? We can look at Microsoft. Let's see how Microsoft looks. You can see, you want to see a stock, you want to get the general uptrend. Microsoft's been in an uptrend. It's fallen back. It's fallen below the 50-day and the 20-day. So it's got a little work here to do to get back up above the moving averages convincingly. So Microsoft may be lingering down here for a little bit until it really starts to get its mojo back. You want to see it above the moving averages, not below it if you're bullish. If you're bearish, that's a better sign. If it's moving below the moving averages, and if the moving averages are sloping downwards, so you can see the 20-day moving average is sloping downwards, the 50-day is starting to curl over to downwards action. That means there's more bearishness in Microsoft at the moment than bullishness. So if you're a bull on Microsoft, you'd probably want to have a pause right here. Wait until Microsoft starts to move up in a better pattern. Let's see what other stocks we have to look at. Let me see. Let's look at Nike. Let's look at Nike first. We've got some. Nike's been coming off. Just not looking that good for Nike at the moment. It had been in the downtrend of 2022. Let me move myself over here. Here's the 2022 downtrend. Bounced up a little, but once again, it's starting to come off. Looking pretty weak here, but you can see the RSI is getting a little oversold here. So keep an eye on Nike. Maybe it'll find its footing, but right now it looks kind of like a weak chart. Let's look at Disney, because Disney's another company that I look at all the time. Kind of like Nike, it's still kind of moving lower, lower, lower. So this is what I want to tell you. If you're bullish and you're trying to pick bottoms, if you're trying to think, Disney can't go any lower. Well, every time you try to buy low, it keeps going lower. So there's no sense of you sticking your neck out there and getting into bullish trades unless the stock shows you it wants to go higher. What would that be? It would be in an uptrend. Don't try to buy bullish positions with a stock that's in a downtrend. You're going to get burned. You're going to get hurt. You're going to get frustrated. You're going to get angry. And worst off, you're going to lose money. Don't do that. Okay, wait for the stock to move up. If you're bearish, this is the pattern you want to see a stock in, moving lower. Okay, it's just common sense. But Disney is getting closer to the COVID bottom. Let's go out to the monthly chart here for Disney. All right, so the COVID low was just below $80. Let's draw a line here. Let's draw a support line here, you know, right around the 80 level, okay, maybe 79. Okay, so this is the area that Disney's going to have some support. Here, let's fix that. That was a bad one. Let's start over here, right in the, you know, high 70s, low 80s. We want to show that support right there. Okay, still the line's a little bit lopsided, but the right around 80. So if you want to be bullish on Disney, wait for the bounce. You know, maybe you nibble a little bit at 80 since that's a long-term support, but don't go all in. You want to wait to see it bounce before you really jump in. Let's look at a couple other stocks here. Let's look at Coca-Cola. Okay, Coca-Cola is a great long-term dividend paying company. Not a lot of volatility. You can see it's been fluctuating between $59 and $65 or so, just kind of meandering along. Not a lot of price appreciation, but for your dividend receivers, Coca-Cola is a pretty good company. Fluctuating. Maybe you wait for it to come down to 59 again, just to see if it bounces. You know, wait for the bounce before jumping in. You don't want to jump the gun because it could keep blasting. It could potentially blast through the 59 level. So you want to wait for the turn before you get into that bullish play. Let's look at Pepsi. Also another great dividend paying company, Coke and Pepsi. You can see in the uptrending channel, lots of ups and downs. Now, Pepsi recently has fallen below. If we were to extend this line, you can see it would have fallen below. Let's remove the line here, okay? And we'll create a new support area, or where you can see it has fallen through. If we connect some of the lines, you can see, or I should say if we connect some of the bottom points, it has fallen through, but you can see also it bounced back above the bottom edge here. So Pepsi's also at an inflection point. You want to see if it gets up again and moves back up into the uptrending channel. This could be a good buy area. I mean, Pepsi's had good support. It's been in the channel. There's really nothing to make it really want to go down further. It's a great company. So keep an eye on the support level for Pepsi, right around $180 a share. If it gets back in here and starts to move higher, that could be your next bullish catalyst. Costco, another great company. Now, I want to say here's another one of these patterns right here, this congestion pattern, which typically you see the ranges get tighter and tighter and tighter, and then eventually it has to blow out in one direction or another, and obviously it moved to the upside. But Costco also starting to pull back here. Not completely oversold on the RSI, but having a pullback. I would not get into any bullish positions yet on Costco because it's not showing me that it wants to turn around yet. You have to wait for the turnaround before you get into the next trade. All right, let's look at a couple others and call it a day here. McDonald's, anything in McDonald's. Let's take a quick look at McDonald's, also a strong stock. You can just see without the trend lines, you can see it's going from bottom left to top right. That means the stock is in an uptrend, okay? So you want to wait for a pullback. This is a great pullback lesson right here. Here's the 200-day moving average, which is an extremely important number. You can see McDonald's fell down to the 200-day moving average and bounced pretty good. So that could have been your catalyst. This week could have been an area where you wanted to get long, take a quick bullish trade on McDonald's. Now it has the 20-day and 50-day moving averages lurking above. So it may have a little trouble getting through either one of those right off the bat. So what you'll probably see is McDonald's will probably meander. Now that it has bounced, it might meander a little bit because it's got the 20-day and 50-day acting as resistance above it. Until it can convincingly get above both of those, for now it'll probably hang around this area only because it's got both of these moving averages giving it some resistance above it. So keep an eye on McDonald's. Let's see what else we got. Nothing really else of note here. Let's look at Carvana, because I had mentioned in a prior video that Carvana is one of the most heavily shorted stocks out there. What does that mean? That means so many people are betting against Carvana, meaning they're bearish. And when you have so many people on one side of the market, meaning they're bearish, all it takes is a little teeny catalyst to move this, ignite the fire and move this thing higher. And all those short players are going to have to all buy at the same time and push the stock higher massively. So you can see Carvana right on the 50-day moving average support, right around, $41. This could be, it could be getting ready to make that move higher. It could blast up towards $50, $60. So keep an eye on Carvana, heavily shorted stock. One little move higher could ignite that fire to get a lot of bullish people, all those short players, back into the market. So keep an eye on Carvana. Okay, so I think that's all that I have here for today. What we do here at the Smart Option Seller is that when we see a bullish position, we sell put options. That's what we do because that's how we like to trade. Let's quickly go to our website, smartoptionseller.com. If you want to learn about put selling, put option selling, that's what we do. We have our put selling basics. Click on this header right here, get our free ebook, Put Selling Basics. Scroll down, put your name and email address here. We'll send you an email with a link to the book. We have these forms all over our website. You only have to fill it out once to get the book. Also, if you want to learn a little bit more about put options, we're having our Put Selling Intensive webinar coming up in September. Click on this link to read a little bit more about the webinar. Here's our services tab over here. We have our newsletters that we run. We have our coaching sessions that we run if you want to get a little help upping your options trading game. All right, so on the screen here, I'm going to put some other put selling videos that you can watch. And don't forget, in the description below are some links for some things that may help you. I have the books that we talked about, the broker that I use, some other helpful websites that we use. Take a look at those. If this has been helpful, I'm here doing these free videos, trying to help the community. Give me a like, give me a thumbs up, leave me a comment. Don't forget to subscribe. Hit that red subscribe button in the bottom right-hand corner of the video. And send me an email. I'll always answer your emails as well. All right, so that's all for today. I hope everyone has a great weekend, and I'll see you all here next weekend. This is Lee Lowell signing off.